Hey everybody, Dennis Wilborn. Thanks for joining us back for the next session of Avoiding These 6 Habits of Losing Traders. My objective is to clarify, simplify the trading process so traders can multiply profits and minimize risk. So let's get today's session right now. So let's talk about trading habits that are killing your profits. And this is where I think part of the deal is we want to learn how to be honest with ourselves more than anything else. If we're honest with ourselves, we basically can take the action necessary to improve our habits so that we're not killing our profits. Here's some of the ones, and I've counted up 6 of them. 1, trading without rules or systems. Okay. For whatever, for whatever reason, a lot of folks believe that trading is easy. In premise, it's simple, but it's not necessarily easy. There's a lot of stuff that goes into it, a lot of emotional stuff that goes into it. I know, Rocco, you have gotten started in trading and are doing really well with it, but you guys started within the past, couple of years. Were you surprised at the various level of emotional attachments that you found when you started trading? And I'll leave the question open with Warren and Mark also. Because on the surface, it looks like it should be pretty straightforward, pretty easy. Cool. Would you like to elaborate any? So I'll constantly continue to be surprised at people wanting to trade without rules, without systems, and it's probably because I think that they have this, and I won't call it overblown, but they have a misconception of themselves misconception about themselves that they give themselves, for whatever reason, the benefit of the doubt that I should know how to do this, and when in reality, it's like anything else. It's a skill that needs to be developed. And so that's number 1. Number 2, poor technical analysis. They have no idea of where the buyers and the sellers are hanging out. And Mark says, yeah, more complex than he thought. Rocco, I just don't know anything about trading, so there was a lot of intrepidation, and the active trend trading system helped me get past that. Well, thank you, sir. Although things still jump in. Yeah, they do. And you know what? It's almost like with any other kind of contact sport, they always will. So anyway, number 2, poor analysis, no idea on where the buyers and the sellers are hanging out. After today, you will continue to enhance that capability of where do the buyers and sellers hang out. They have no pre-trade routine. What does that mean? In other words, they don't define how many stocks they're going to review on a daily, on a weekly basis. They don't know their own limit, how they need to limit themselves, because, what's the Goldilocks mix? In other words, the just right mix on a pre-trade routine. And we'll cover a little bit about that. They basically jump in either too early or too late. This is a habit. They try to pick the bottoms, pick the bottoms or pick the tops. When part of the things in learning the process is to learn the middle of the trend is where the profits are made. I encourage you to take that basic term or that sentence right there and put it on your refrigerator door or something like that, or on your computer screen, wherever you do your trading. Say the middle of the trend is where the profits are made. And so what's that saying? It's saying that if we're in too early, the trend hasn't changed yet. If we're in too late, the trend has already changed and left us behind, and we're getting too close to the place of the trend changing back the other way. Number 5, poor thinking. And then number 6, it's all about probabilities. Excuse me just a second. Poor technical analysis, where no idea of where to buy or where to sell. I think this is part of the issue that so many traders, have an issue with. Once a person has been trading for a while, is we have to watch out with this concept because we may have the head or the intelligence or the wisdom or the knowledge of knowing when and where, where the buyers and sellers are hanging out, but we don't trust it. We don't trust it. And therefore we second guess and judge the potential entry, the potential exit, and that can be, again, an issue of poor analysis. So we need to get a view of technical analysis as a picture of where traders are lining up to buy and sell. And they're fairly easy areas to identify on the specific charts. We need to understand the levels as either a set level where buyers and sellers will come in, or a dynamic level where buyers and sellers come in. Now, when I say a dynamic level, what I'm talking about there is the support and resistance that is provided by trend lines and moving averages. And what are Fibonacci's to some extent. And then the set levels are the levels where we've had past proven levels of either support or resistance and where those come in. So here's an example. Wise, disciplined, profitable traders view technical analysis as a picture of where other traders are lining up to either buy or sell. And this is where the chart I had provided earlier on the cues, this basically identifies these areas. So in this particular case, the peak, this is where the sellers showed up. Now let me ask you a question. Is we've identified this level of where this is where the sellers show up, and sure enough, they showed up here again, and then they showed up here again. Now it was inching up slightly across here. Get rid of that. So I just want to be aware of this price action in this zone right here. As prices came down and bounced and went back up and retested this area, when you see it coming back down and not setting, like you can say, well, I'm going to short that, which is okay, or I'm going to short falling out the bottom of that zone, which is okay. But when you see that type of action there where it stops short of going into a full downtrend, what should your mindset be? What should your self-talk be? What should you be telling yourself at that particular point? Okay. Right here. Okay. Wait. Okay, good. Both of those are great answers. Yeah, Rocco, they didn't get out of the support area of this past low. So, that may make coming back up through this resistance area a stronger potential, which it does. Higher probability that it's going to break through. Made a higher low. Yep. So all those things are, so does that mean our initial assessment that when we get back up and where the past sellers showed up and the sellers did show up, did that make our original assessment wrong? Good. Yeah. They are dynamically changing. Now, same thing over here. What's next? Well, past buyers. And you can see, and this is a really excellent example, I believe, is we had shown, you know, again, we get back to look to the left. We look back to the left and we see that buyers basically, and actually if we extend this, it actually comes in over here also, right, that lower level. So as we see, buyers came in here as we were in the uptrend, and they, you know, we've had several bounces off of this zone. We get into the zone. This was back in December 2019. Yeah, 2019, I believe. No, 2018, excuse me. We get back down into this zone, and we actually fail it. We fall through the bottom of it. But then on the same, this is a weekly chart, same week that this happens, we come roaring back up through that level. What changed during the week? Okay, earlier in the week, we broke down below it. What should our, when we broke down below this level, what should our, below the bottom of the green level, what should our sentiment have been? Well, that particular place, our sentiment should have been, we're probably going to go lower down into these past lows over here. Yep. By the end of the week, though, with the price action moving back up through that level of past support, how did your sentiment or your thoughts of what was going to happen, how should that have changed? Yep, good. And that's an early warning on that, because in reality, we had not taken out these past highs over here or even this past lower low, but it was that's where buyers came in before. Yeah, exactly, Rocco. It's very similar. You know, it's never ever the exact same, but there's a lot of rhyming that goes on. So that's where, you know, we want to be, and the same thing happened over here this past year. We have an area of identified support. We can actually draw that green line on over here, and it, you know, provided both support and resistance. Then it changed polarity, went on up, hit, fell, found support, bounced again. And then we come back and just retrace all the way back down. Prices drop down below the level and then ricochet same week. Huge move to the upside. That was a clue to saying, okay, it appears like we now have a process in place to just jump back in. And Mark was saying he was bearish at the time. Yeah, so was I, Mark. You know, over here. But I was anticipating it, because what are the other things? What are some of the other clues that are providing to us? This is what's going on here with the TSI and the dadgum market forecast. Right there, lines up totally or approximately. So there's a lot of other clues going on around there, and that's part of it. Just step back, look at the longer time frame charts. Price actions are at or close to a level of past support. That's just where, and then it's a matter of let's wait for the buyers to actually come back in. And during that 1 week, both weeks, the buyers did in fact come back in. So.
Okay, well, I hope you enjoyed that session on our latest training. And if you want to get more information about active trend trading, you'll find links down in the descriptions on this video. And please go back and review these. I put these out based on my 30 years experience in trading stocks and options. And so again, if you like it, give us a thumbs up. If you like the channel, subscribe, and we'll talk to you later. Be watching for the next installment of Avoiding the 6 Habits of Losing Traders. Aloha, God bless.